Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. As both houses of parliament convened for a joint session to launch the GST with Union Finance Minister Arun Jaitley's speech, reminiscent of Jawaharlal Nehru's India's tryst with destiny, India heralded the onset of what is undoubtedly the biggest tax reform in its history. Truly, this is another tryst with destiny, one of the most ambitious economic reforms in India since independence, one which has the ability to realign the entire landscape of the country. For far too long, we have been witness to a maze of taxes and tax laws that have often even left the authorities befuddled. The dream of one nation, one tax, one market is now finally a reality, and the government deserves applause for deftly negotiating the roadblocks and pushing this through. From a business point of view, an integrated India is a huge positive for everyone involved, be it the centre, the state governments or businesses. It has been 1 week since the landmark tax regime has taken effect, and in the first segment of Policy Watch today, we will take stock of what has transpired thus far. Joining me on the program today are CM Vasudev, former Finance Secretary, and KG Narendranath, Executive Editor, Economics Financial Express. Thank you to both my guests for joining me on this edition of Policy Watch. Mr. Vasudev, 1 week since GST now, there's a lot of skepticism, a lot of doubts about how there could be, a lot of confusion once GST kicks in. But thus far, everything seems to have gone on smoothly.
Yeah, certainly no glitches so far. One, I think, has to also recognize that there is a 2-3 month period during which the returns have to be filed. People have been given that time to get used to it. People have been given time to dispose of the stocks which they had acquired before 1st of July. But still, it's a very good sort of indication that the businesses in India have taken to the GST regime in such a smooth manner. There are still bound to be some glitches because there are still a lot of concerns. And I feel that the concerns really fall in 3 sort of broad categories. First category is with regard to the rates. A lot of people are still saying, like the textile people and this and that the rates are a little unrealistic and they are high. I think that argument probably is not getting fully projected in a right perspective.
But the lobbying will continue, you think? It will continue
because I think, but the issue that needs to come out in the public domain is that it doesn't make sense to compare the current, say, VAT rate with the GST rate. Because GST rate, there will be no cascading effect of taxes.
Yes.
So the price of the product will also come down. So the VAT on that product will be different. So this comparison of the existing rate of VAT or whatever with GST, I think is really missing the picture. That is an area which I think government or others also need to bring out in the public domain so that people are better educated. But there are certain areas who are now not used to paying taxes, like textiles and various other small businesses. So they will have a little problem, but then they have to get used to it because the tax will be paid by the consumer at the end of the day. The second set of, I think, problems or complaints are with regard to the compliance issues. People feel that the compliance cost is going to be very heavy for small businesses and all that. But that, I think, is also highly exaggerated. As things will come out, everything is going to be seamless. Once your system is in tune with the GST network, everything is going to be seamless. So the compliance cost is not going to be as heavy as some people apprehend. The third category of complaints, I think, is the bigger problem or the bigger one. That is people who are used to cash transactions. Sellers who are used to selling in cash, buyers who are willing to avoid taxes. Now, the whole purpose of GST and all these reforms is to widen the tax, to bring everyone. So they will continue to complain and they will continue to highlight some of the difficulties and all that. Their problem is not so much that after all, the consumer is going to pay the tax. Why should the trader or the seller bother so much about it? He is bothered because then his transactions will become clean.
Yes.
And then for the income tax side, again, he will find it very difficult to conceal income.
Sure.
So this is all integrated. And the benefit of this will be that cash transactions will be minimal, will reduce considerably. So the formal economy will become stronger. The informal economy will be less. Black money usage will be less. Black money generation will be less. So I think these are some of the costs which people have to bear.
Indeed. You know, KG Narendranath, would you say that is not just an economic decision, but a strong political message also that has been sent out by the government by bringing in the GST and also ensuring its success in the first week?
Yeah, the political message actually, not only this government, the previous governments also have been trying to push this reform. For political reasons, both parties when they are in the opposition tried to block it also. But political message, I can say, from the cooperative federalism perspective, states now going to be, there is more of a union among states now. So the states' own revenue mobilization freedom, that one can say is curtailed to a certain extent, because you have to come to the GST platform to take a decision on rates and all. But there is no need for the states to worry actually, because a large part of their taxes are, even now after the GST also, it is not as comprehensive as it was designed to be initially. Real estate is out, petroleum products are out, some of the petroleum products are out, alcohol is out, stamp duty, registration fee and all state will continue to get. So states' own tax revenue, they have a certain buffer there, which has not been included in the GST, which is not good for the GST perspective, because GST has to be very comprehensive. It is a multi-point tax on value addition. So the entire value chain has to be subsumed in GST so that it is as comprehensive as possible, so that, as he said, the informal economy comes down. So states have no problem in that way. But even then, states can say that our revenue raising ability has been, the rate changes and all the possibilities have come down because in GST. So the political message is that only.
Yes.
The cooperative federalism perspective.
Sure. You know, Mr. Vasudev, the point that Mr. Narendranath is raising about how almost 50% of the GDP is left out of the ambit of the GST. For instance, petroleum products, like he rightly spoke about, liquor, commercial real estate as well as there are several, electricity. There's no clarity still as far as electricity is concerned. Do you believe that going forward, there will be some kind of a, comprehensive plan to bring all these under the GST?
It's not 50 really. If you say take the state's revenues today, it is almost 60% which is out of GST.
Yes.
Whether it is potable alcohol or whether petroleum or stamp duty or real estate and electricity duty, 60% is out. But I think the good thing is that other than potable alcohol, which is part of the law that GST will not apply, all on the other areas the law says GST is applicable. It is just a decision of the GST Council that not to levy GST on those projects at this point of time. So it is much easier in that sense to introduce GST on these products, because you don't have to go back to Parliament for lawmaking, then you get mired in political issues. GST Council is a little more professional body, with a little bit more apolitical than Parliament, and the fact that all these other taxes are part of the law and their exemption from GST is only coming out of the GST Council decision, I think it's a good augury. And as the system gets used to it, as the states also start getting the feeling that they are not losing revenue, maybe the revenue is increasing because the turnover is more, the size of the formal economy is increasing, so the revenue buoyancy is there, they may agree to introduce these also. So it will come in due course. But at the moment, certainly 60% revenues being out of GST, it's still work in progress, I would say.
So can we still call it one nation, one tax?
Well, one nation, one tax for one product. You cannot say one nation, one tax for all products, but whatever products are covered under GST, it is one nation, one tax for that product.
Okay, fair enough. Mr. Narendranath, when the GST Council meets next, of course the date is still not announced, but I'm sure that it will meet soon. What are the issues that we can probably be discussed on the table of the GST Council?
The issue of prices, because even though for about 50% of the products in the CPI basket, the GST is 0. For another 10%, it is 5%. Only some 15% of the GST, the CPI basket items, retail inflation basket items, are under the highest rate of 28%. And because of the input tax credit mechanism also, the tax incidence will come down on businesses. But still, you have to ensure that the businesses use this as an opportunity to increase their prices. So there are already trends of even people taxing GST on the pre-GST price, which is actually excise and VAT inclusive price. So that is a wrong practice. So there is a lot of confusion among the people, and the businesses willingly or otherwise are utilizing that to increase the prices. So that will be a primary issue because the government has said GST won't be inflationary. Internationally, if you see in many countries where GST was introduced, immediately after the introduction,
the first one here
in Malaysia and various other places, there has been an inflationary trend. But if you see the actual tax incidence, they actually gone with the principle of equivalence principle, because the tax rates won't go up wherever, there will not be a rate shock anywhere. So far as possible, the rate will be kept closer to the earlier rate or even lower than that.
Yes.
Deliberately also they have brought down the rates on various items in addition to that equivalence principle. So it is unlikely that in only a very small segment of items the rate will actually increase, or the actual incidence of tax will increase if you take the input tax credit mechanism also into account.
Sure.
So that will be one principal thing which the GST Council will be deliberating on, because they have already got an anti-profiteering clause.
Right.
The government has made it clear that we don't want to use it so far as possible. It's only a deterrent. So to use it also is not very desirable also, because it will be kind of a control, throwback to the control Raj, because the bureaucrats can use it for various other purposes also. So the government has to ensure that the businesses don't use this as an opportunity to increase prices.
Indeed.
So that will be an important thing to be. And then the other issues of compliance issues. Compliance issues, as Mr. Vasudev said, it is not a big thing. For anything new thing, there will be an initial resistance. So initially you may have to do a bit of IT and all, but after some time you will get used to it, and it is not as big as it is now projected to be. And also for small businesses, there is a composition scheme. So they have to pay only as percentage of the turnover.
Right.
So as he rightly mentioned, the issue is not about the compliance. Some people fear that their income, the transaction volume has to be fully shown in the records, which will actually lead to their income tax liability, increased income tax liability on them. That's why many people are actually opposing.
But I think on the inflation point, I think one must, give credit to the government that they were very mindful of the possible inflationary impact of GST, as has been the experience in many other countries. So they have tried to ensure that the taxes in bulk of the items which form part of the basket of consumer price index, the tax rates have been kept very low. So I do not expect the price index and consumer price index to go up because of GST. Maybe service tax, there may be a little inflation. But on the good side, I don't expect that. The government has been very mindful of that, and they have tried to ensure that the basket of commodity and consumer price index, that is moderated.
Okay. On that note, we'll call it a wrap on this first segment of Policy Watch. Thank you, CM Vasudev and KG Narendranath, for joining me on the program and putting things into perspective for us. It's time for a short break now. On the other side, we'll analyze Air India's privatization woes. Stay tuned. We'll be right back.
Nelson Rolihlahla Mandela, affectionately known as Madiba, was South Africa's first democratically elected president, an international peacemaker and statesman, and a Nobel Peace Prize winner. Through a long career as an activist, Mandela was a crusader for equal rights for South Africa's black majority. Having undergone frequent imprisonment, in 1964, Mandela was sentenced to life in jail. Charged with sabotage, treason, and violent conspiracy, he narrowly escaped the gallows. He was released in 1990, having initiated talks with South African President de Klerk towards ending apartheid in the country. Mandela was awarded the Nobel Prize for Peace in 1993 for his efforts. In April 1994, the Mandela-led African National Congress won South Africa's first elections by universal suffrage. And Mandela was sworn in as president of the country's first multi-ethnic government. He retired from the presidency in 1999 and from public life in 2004. Nelson Mandela died on December 5, 2013, from a recurring lung infection.
Welcome back. You're watching Policy Watch with me, Frank Pereira. The centre may not take over all of Air India's 52,000 crore rupees debt as part of the airline's strategic disinvestment process, and private players eyeing the national carrier are likely to be saddled with some of its outstanding loans, according to media reports. Now, this assumes significance in light of the unsolicited expression of interest from India's largest low-cost airline, IndiGo, for taking over Air India. While IndiGo has appeared keen to acquire a stake in Air India, the airline has said that it would not be prepared to bear the state-owned carrier's unsustainable liabilities. Air India has total debt of 52,000 crore rupees, comprising of 22,000 crore rupees as aircraft loans and the rest as working capital loans and other liabilities. Air India has financed working capital through borrowings from a consortium of 25 banks. In our next segment, we will analyze the privatization woes of Air India. Joining me on the program right now are Kapil Kak, retired Air Vice Marshal, and Sanat Kaul, Chairman, International Foundation for Aviation Development. Thank you to both my guests for joining me on this edition of Policy Watch. Marshal, I'd like to begin with you, of course. This privatization issue has been going on for about a couple of months now, at least. I mean, it's resurfaced in the last 2 months, and the government is extremely keen on privatizing Air India. There are a couple of players who've expressed interest as well, but is it going to be that easy to privatize Air India?
No, you're right. It's not going to be easy, but I think I'd like to give credit to the government that the timelines they have chosen have been in fairly dynamic mode. Because civil aviation policy, you will recall in January when it was laid out, that time the Union Civil Aviation Minister had said, we are looking at Air India privatization. 28th of April, Prime Minister gives a directive that privatization of Air India has to happen. 28th of June, just 2 months later, we have a Cabinet Committee on Economic Affairs takes a decision to accord in principle approval for divestment of Air India's stake, in other words, disinvestment. No, I think the timelines are perfect, but what's most important is the process. Now, this is where the points you made come in very handy. Number one is that the group of ministers, or what's called the alternative mechanism, which has been chaired by Finance Minister Jetli, it will first determine how to address what you rightly call the unsustainable debt of Air India. That's the key issue. Because unless you address debt issue, there are not going to be private players which are going to come to take over the Air India, because you're transferring the debt from the government to some private player who would not want. Secondly, what is the nature of the disinvestment process? Thirdly, what is the quantum of disinvestment? Will it be 74%? Will it be 51, 49? That has to be decided. Then the question which we don't quite address is employees.
Yes.
What do you do with the employees? They've been quiet so far, only made one statement immediately after the CCA approval was given, in principle approval was given, because for a government like this, they will have to be very sensitive to not having an agitation by the Air India employees, especially when the farmers, stress is already there. There are other issues on the. Lastly, I think the most critical point is that unless you unbundle Air India's assets and liabilities, unbundling meaning 5 subsidiaries, unless they are sold out in whichever form you sell them out, you're not going to get some buyers, including IndiGo that you just talked about. Tatas are in touch with the government, although it's not been officially accepted.
Yes.
And I think there will be many more players. But the decision also being taken that there will be no foreign
assets that you just raised. I want to take that up with Mr. Kaul. Air India is in possession of prime property both here in Delhi and in Mumbai. But is it going to be that easy and simple for the government to really dispose of those assets and make sure that the debt itself can be reduced? Because these properties don't belong to Air India, because the property in Mumbai belongs to the government of Maharashtra and the property in Delhi belongs to the union government.
No, see, the concept of financial engineering is required. How do you do it? I mean, you were able to turn around Satyam, and Japan Airline had a 10 billion debt and it was turned around. Now, disinvestment and turning around are two separate steps. And I feel that, yes, you can do it. It's not such a difficult thing. Maybe you can give the management by way of dividing Air India into two companies, one with assets and liabilities, which can be kept separately, which may retain up to, say, 49% shares, and the rest will be managed. The airline's assets like slots, hangars, everything else, which
lounges,
everything can be a great asset for any new incumbent. So, and then you get a price also for it, and that price can be given back to the company which has the debt and liabilities. So, there are methods of turning around. It requires a lot of financial engineering, and it can be done, I think.
Unless the government takes a haircut, do you believe that the private organizations will be interested in Air India?
Frankly, I don't think government needs a haircut.
Okay.
Government doesn't need a haircut, but government has to hang on to the liability it has managed to create over time and get a new management which can do a fantastic job with this company. I mean, hopefully it can do a much better job and bring in the dividends.
Air Marshal doesn't agree with you at all.
Well, no, everybody has views.
No, I'm not disagreeing, but I'm just saying that there are two issues here. One is the point Mr. Sanat Kaul raised, that you create another company. That's already under contemplation, that you have a special purpose vehicle, SPV, which Air India will transfer its assets and liabilities, especially the working capital one, and at the same time the liabilities will be retained in the books of Air India. You see, that gives you a kind of a mechanism by which you can hive off whatever are the assets. The problem of Maharashtra government and Union government owning this does not matter. It is with Air India. That's a governmental arrangement. But it is with Air India. They know that the 22 acres which are in central Mumbai, I mean, it's an amazing real estate. You know what that means?
Yes.
One Air India building has been valuated as 1,600 crores. That's the flagship building in Nariman Point. This is what the SPV can do. I also feel, Frank, amongst the other things I enumerated earlier, we also need a group of professionals in legalities and finance which will see the sale through, and you can't pass it on to a deputy secretary or a joint secretary because this is a completely special arrangement. I also believe the government is very keen to do this by 31st of March. So timelines so far have been good. If they keep this dynamic mode, it may be possible, but even if it slips on to the next year, heavens will not fall. But the government, when it comes with a budget in March, it will announce a grand measure like so much has been done for Air India. We are about to disinvest to a large degree, and most importantly, what is forgotten is the 30,000 crore loan which was given by UPA 2 in 2012 for a 10-year period, so 3,000 crores a year. 26,000 crores is already eaten up.
Yes.
You still have 6 years to go.
Sure.
So there are huge problems, but I believe Air India is still worth it. What we haven't taken into account is not just the lounges, but the flight rights.
Yes.
This overflight rights to destinations, flying to 71
Indeed.
destinations.
You know, that's a point that I want to take forward.
That's
you know,
all priced.
Yeah.
So is the resource.
Private players like Indigo, you know, might be tempted by Air India's international flights, international routes and its international operations. But what about its operations domestically, where it only has a 13% share and the private carriers already have the market?
Well, 13% share is small and it's been a declining share. But at the same time, for an international airline to have a domestic connectivity is not a bad idea. And therefore, anybody who takes over the management of both domestic and international also must see the advantage in this. When the jet deal took place with Etihad, they were looking at the domestic connectivity of jet. And it was so good. So, domestic connectivity for an international airline makes it an opportunity.
Yes.
So, anybody who takes over Air India also has an asset in domestic connectivity, even though it's come down from whatever 17%.
But does it make sense for someone like an Indigo?
I think it does.
Yeah, I agree.
The only thing is the
financial.
Yes, it does. It's only the liability of 56,000 crores which is bothering them.
Sure.
And if that is sorted out, it makes a lot of sense in my view.
You know, there were reports about the Tatas also taking over Air India at some point in time. Do you believe that that's likely to happen and it will be a sweet homecoming as far as Air India is concerned?
Well, in 2001 they practically got it, but then last minute Singapore Airlines backed out, and after that 2000 this 9/11 took place within 2 weeks of that, so no other airline was coming forward and they were not prepared to go alone. So it is a kind of a thinking in their mind that they must get their asset back. Well, best of luck to them. That's all I can say.
Marshal, what do you expect to happen in the few months to come? Because like you rightly pointed out that the government is keen on closing this deal by the 31st of March, and it's been sending the right kind of signals, but what's likely to happen?
I think what's not been reported perhaps is that the government is doing some very good and nimble footwork in trying to see if the lenders of Air India can reschedule the loans that have been given at one point. At the second point, can they convert this into equity? Now, this is a business where they'll have to study the business model. Two things which we need to bring out is not just that it's got 14% domestic share. Air India has 70% of the international share of our airline.
Yes.
That's not a small amount, 71% to be precise. Then the third issue is that if the lenders have a problem, then the government would be quite inclined to write off. In fact, that is why Mr. Arun Jaitley has been requested by the Civil Aviation Minister to be in charge of this alternative mechanism, because he will have to dish out the rupees to underwrite part of the debt. So government doesn't have to underwrite the whole range of debt. But I think my sense is that if we keep this process as it has been so far, we will succeed in the endeavor and the objective to do a fairly decent disinvestment.
Right.
But it has to be done in a meticulous, very, very transparent
and
time-bound manner.
Sure.
Then the government will get all the accolades, and the public like you and me, taxpayers, and as somebody rightly remarked, 30,000 crores which were given in 2012 by UPA 2, they can feed 200 million Indians for 2 years.
Yes.
That's a lot.
So you get the picture.
Right. A quick closing comment from you, Mr. Kaul.
Well, I think it's a doable thing. It's a lot of effort, because I have the case of Japan Airline, which was $10 billion in debt, which is turned around in maybe 24 months. So it's a matter of how much the government is interested and at what pains they're going to take about it. I mean, they've had the opportunity the last 3 years. They were just managing it and it didn't work. Now, if they're going to do a smart thing, do a lot of financial, it's a doable thing if they want to do it.
Okay, it's a doable thing. It's just a matter of, will at the end of the day. On that note, I'll have to call it a wrap on this edition of Policy Watch. Kapil Kak and Sanat Kaul, thank you, gentlemen, for joining me on the program and putting things into perspective for us. That's all the time we have today. See you again next time.